Video 3 of 3 on 126. So this was, I was right. When it was down here, I said it's worth a shot to go long. It's $10. I mean, how much more can it go? I said take part 1 of 2. If you did, I would exit here. I don't believe in its fundamentals, but I believe it was a bargain down at 10. They have great shows. Their player sucks. So somebody might buy them because of their studio. It's not an entry point here. It could break out and go to 12. If it gets above 1180 or 1190, look at that fail right there. So solid support. The same logic tells me I'm not long here. That's about it. I wouldn't want to short it. 17 days, they will report earnings. Let's see what they say. Path. Okay, P&L, not awesome. It was a long. I waited too long when it was down here. It beeped at me on this poke. I should have gone long, but I hesitated because the whole market was on its heels. And look at the size of this head and shoulders that is there. So there is a massive head and shoulders. I want to draw it. Actually, I won't draw it. I'm saying it to you because people will buy a put. A head and shoulders is not a reason to buy a put. It's a reason to know how far down it can go if you lose. So this is solid support that needs to hold. Else 10.5 or lower. Fair game. Okay, so I'm not going to put an arrow. They can read it if they're interested. So solid, big words, but needs to hold that solid. So next time it comes down here, you pick up a few shares. That's good. I'll put an alert with a different mindset. 14.6, if you trade that out, this one, you might get to 15.6. It would be an exit. For me is exit trades. Longs. Bullish. This is an opportunity right here. This opportunity should give you 16. Pepsi. Okay, another one of those that I thought was grossly overpriced and we couldn't explain what the fudge was going on, like Coca-Cola. This one is acting even worse. So this is a weekly chart, 5-year data. And I thought that there was a reason to come to here, and they did. And I went here, I said they might bounce and come down to here, and they did. They didn't even bounce. It just went straight down. So you can see now, everything I hated about it up here, I like about it down here. In other words, it is falling into a pretty wide zone of consolidation. So I'm going to say solid support. Okay. And doesn't mean I buy calls. It means if I'm long, I'm not getting out if I waited this long. If I want to get long, I would sell puts to own shares down in there. So that would be an action point for me. Where is it? There we go. So if you twist my arm and you say do something with it, I'd sell puts to own shares. So I'm going to put an alert down here and an alert down here and an alert down here. Earnings are coming soon. Let's see what they say and how they react to it. What the company will say and how people will react to it. A lot of resistance above. So if it rallies to 158, I would be out. I would not hold it. It's a trade. Palantir. Next time you want to ask for more than 4 tickers, you can just submit 2 forms. Luckily, I read the comment section and I saw you wanted to look at Palantir, so I'm going in there. What am I going to say? There's nothing I can say that hasn't been imagined by people. One of my favorite companies, we got long at 7, 8, 12, 14, 22, 28. And then I said, okay, I'm waiting for it again. After that, I never showed interest, so I missed from 28 to here. So act according to your risk appetite. For me, I've traded a lifetime. I've missed opportunities before, and I still did awesome because there are 2,000 stocks I can trade. I don't need to trade the perfect one every time. So it's on my to-do list. The next time the market crashes, it will be back on my watch list. Until then, it's a no-touch. If I own it, I can own it. I got into it for an investment, just manage. Leave room to add. if you just got started. If you're just getting started and you go all in, then you have more conviction than me in the future of this world. I'm really concerned about significant upside from here, although it's available. So if they take out the high, they can probably go to 98. And if they go to 98, you don't think they're going to try for 3 digits? Of course they are. Round numbers, they love it. They're like moth through a light. On the other hand, I couldn't write out it being at 60 in the next 3 months through no fault of its own. Earnings in 8 days. So I've no doubt the report's going to be great. They do business with they do a lot of business with the government. That's what they started out as, like 15, 16 years ago. That's not a new company. The people in it are huge people from Silicon Valley, so they have a good reputation, good leadership, good contacts, and with this new government, they're probably going to have more business. We'll see if the government's going to be cutting back or taking some stuff in-house or broadening their reach for AI. I don't know. The report will be good. The message is the question versus what's been inspired already. So, buy the dip? Absolutely. Hold with conviction? No. Starter position? Fine. Hopefully that gives you enough. Traders versus investors. Figure out, are you trading or investing? Pinterest. I don't like it anymore. The P&L is too wonky. The price of the stock too volatile. So technically, you get to 33.50, you probably get to 37 into that big R. Up until then, that big R, that line's still there. So this one is still here. The big R is still here. That's a cartoony looking R. They did this for us. And if it gets to 37 or higher, I would be out. If I'm long and I get this opportunity to get out, I would be out. Solid support. Next time it dips, you can get long. Earnings in 11 days. If they fall into 31, which is potentially doable, or 29.5 or 30, which is doable, those are measured moves. Those are targets from this red W you see on my screen. So it would be not a reason to start shorting, but it's a reason to close your shorts if you're short here. With earnings 11 days, I'm not going to be short. I would react to it after the earnings. So you could convince me to go long if they fall back into 29 or lower. PayPal, I wouldn't touch it up here. It's just too high. So this is a company that follows Bitcoin often, and I'm leery of this move. In fact, any stock that looks like this, I'm not touching because it's just too much of a question mark. So PayPal falling in 2022 made no sense. It couldn't find a floor, and it finally did, but it was hideous. So now they love it, but even though, look how far away from highest price it's at its highest, it was $310. If you're holding out for it to be at $310, I think you're making a mistake. The valuation would be tremendously inflated. So earnings are in 9 days. It makes it a no touch. If I own it as an investment, I don't need to do anything. Just sell some cover calls if possible. Be safe with that. Solid support if it falls. I have multiple levels, 85 or lower, and then the secondary level, 75 or lower. That should be bulletproof. This one right there. Do I have lines? I do. We can draw a box here. Box after box. This should be bulletproof, this blue box. So any dip into this blue box would be awesome. This came to fruition. Okay, so they didn't do all of it, but that was pretty good. And they popped into resistance and it worked. Now they're back into the battle zone. So the next move is based on shock to headline, 9 days. Qualcomm, I would not be long here. I wouldn't short it, but I would expect 160. I would expect a test of 167, either from here or up from 180. So here's the scenario. I said back then, when was that? October 24, may prove to be unbeatable resistance. And I was right. They spiked above it only for a short period of time over a headline, and then they immediately rejected it. So that is correct. And so now they're second effort at it. So if I was trading it, I would expect this or this. So if I'm a trader, I'm shorting it But 10 days and then there's earnings, forget those two. Or if it pops, I would short it against this candle. That's the trader in me. Or wait for a dip, and if it does dip, get long because they're going to hate it. And then it's going to hit solid support, and it's good company. Go with confidence. So I'll put an alert here. And I'll put an alert here. And I'll put an alert here for some crazies. And this is a solid company to go along on dips. Redfin, I wouldn't touch it. I'm very leery of the real estate market this coming year. I think the Fed cannot cut rates, I'll say it this way, as aggressively as they wanted to, even though the president is asking for it. And if they do cut rates, we'll have a placebo effect because I think we will have a turnaround in inflation. We're underestimating how much inflation we have right now. And this company might be in danger. We'll see. Earnings in 18 days. Until then, let's talk technicals. Severe resistance at 8.8. Bigger resistance, anything above 9.5. I would be exiting. Too volatile, too small of a business for me. 18 days, and then they tell us what they did. RGTI. Who is this? Yeah, that's not for me. Is this another nuclear company? Quantum computing. Of course it is. Yes, why not? Okay, so let's talk. When a stock, same as the other quantum computer, when a stock goes from point A to point B and comes back to the middle zone, that is an exit. In fact, this target was to the penny, this target right here. So something to think about. I think 17.5 or higher, big resistance. Now, these are chart talks. Fundamentals, you do your homework, you believe in it or you don't. If you're an investor, ignore everything I said. You're in it for the long haul. Short term, support below and resistance above. Nothing to do. Rocket Lab. Made a lot of money for the people in the live room this week. Ryan called it. My levels are playing out. When he called it, I said, okay, but look out for, and I think 80.8 and 81.8. So the levels are still there. So another rally up into, sorry, not 80, 30.8 and 31.8. Resistance at 31.6 or higher, given this price action from Friday. 31.6 or higher. Those are trading comments. Investment comments, I mean, it just rocketed, right? Why now? Buy the next dip. They are dipping. You see that? So if you're looking to invest for the long term and just now you realize you want it, wait a couple of days. Because it's for the long term. So why does it matter if you buy it here or here? Anyway, my two cents. P&L is okay, is not awesome, but you guys love it. So, my God. Okay, so you personally, you will never catch me ever in my entire life chasing a company with this chart like this from an investment perspective. I don't care how great it is. Folks, a year ago, this stock was $5. Hell, less than a year ago. June of this year, this stock was $4. Did somebody invest in it? How the hell did this happen? How can we justify it? What did they say? Why is it rocketing like this? Does it have a contract that assures it future revenues? Maybe. So do your homework. No Nick Coin. Okay, so let's talk valuation. Great sales growth. Okay. New company growing aggressively, right? 50% growth. That's great. Let's see on the cash. Bleeds a little cash, not alarming as long as they have it in them. What kind of a business is this? No margins. There's no margin business, just like that other ticker we looked at earlier. By the time you put the burger on the plate, there's nothing left to play from the revenues. In fact, when you run the whole company, you're deep in the red. Losing money is not a problem, but there's no margin. Like if this was short and all of this was operational, I would like it, like ARM. But there's no room. Like what are they going to cut? They're going to have to cut everything in order to break even, unless they change this big red box. Space systems and launch services. There must have been talk of like government contracts or something. So debt is growing, 470 million. Net debt, not debt. So they have assets. It's not a bad debt situation. The bad thing is that the valuation is now 40 years. 40 years. If you buy the stock now, you're giving them credit for sales for 40 years. So it is a 50% grower, it looks like, which means that that number can normalize. But the stock price is rising at a faster pace than the actual sales. Even though it's 50% growth, the stock price is outracing that. So that needs to normalize. Is it related to the mission to Mars? Okay, so that's possible, but it was already there. The gap here, so there's more to it than that. It's not a Trump thing. I mean, maybe the Trump thing made it better, but there's something else going on. All right, so Starbucks, they're fighting over a very important real estate piece. These blue lines, okay, they're very important. I'm going to take that word out. I'm going to move this over to here. Sellers is still there. So the idea is these are moving averages, and we dipped below them and they immediately jumped above them. That is solid. So in 2 days, they report earnings, and this one is really critical. So they have a new CEO on Starbucks, and it's the champion CEO from Chipotle, who turned really big comps there and is expected to do some miracle here. There's a chance, I don't know for sure, but Starbucks is a great company all by itself, but I'm warning you against the expectations being lofty, maybe. So there's a chance that they expect miracles when miracles are not necessary. Like Starbucks did not have a giant problem. Their problem was throughput, that they have too many clients. That's a good problem to have. I'm not sure how much he can make a change in it. I've been to a couple of Starbucks here and there when I'm traveling. I don't go there often. But if you are there and you would love to discuss it in the comment to tell me what you have experienced, have you seen a tangible change? I can notice the change. Like if I go into a fast food restaurant other than Chipotle, I know it's not Chipotle. In Chipotle, I'm in and out in 5 minutes. At In and Out, I'm not in and out in 5 minutes. I'm in 20 minutes. McDonald's even worse. So fast casual restaurants, Chipotle has it dialed. You're in and out in minutes. So if you haven't seen a tangible change in your waiting inside a Starbucks, so where else did he make improvements? So maybe, just maybe, there's going to be a disappointment from the expectations. And if so, it's a buy the dip. Long way to say, if it falls on earnings, buy the dip. Where 88 or lower looks pretty darn good, even though there's a giant gap. So if you're lucky to get 80 or lower, hell yeah. The company is great. They didn't need a CEO to be even better. What is this? Ice cream? Oh, SoftBank. Wait, is this the Masasan Bank? Yeah, I wouldn't touch this. Forget about it. If you want to go long, have at it. This is the company that the what is it? What's that project now? The Stargate, which sounds like a time travel company. Not for me. Just from the fact that this is going into a prior fail, you missed it. If now you're going long, you're chasing headlines, I bet you will lose money on it. Chasing headlines doesn't pay in the long run. Six Flags, no. I don't know what that is. Too small for me, $2 million. Unless you meant Six Flags. I'll give you... There is no Six Flags. It's gone. Okay, so we're not talking about six. SLS. Life Sciences. No income. What is this? Life Sciences. Engages in development, commercialization, immunotherapy. Okay, so charts are not going to help you with these stocks. You either believe in it for the long term or you don't. And if you do believe in it, you buy half your position and you wait. If it gets cut in half, you add it and forget about it. Charts are not helpful. 140 and higher is a breakout. The bottom is 0. Silver. Here's a question. Why is silver lagging when gold is making all-time high? Honestly. Silver is divesting too often from gold. Might be a seasonal thing. I don't believe it. There's something different going on. All right, so this resistance is still there. This is no longer resistance. I would say here support zone. Not very scientific. Let's make it a little bit more scientific. Buy the dip moment somewhere in the 26.50 or lower, where you say you need to hold. Okay, let's zoom out a little bit. There's a risk that takes us down to 24. How? Look left, a little bit more. Okay, this head and shoulders never got negated. This purple line with the purple targets, they came almost to the first purple target, right? But they're still alive. But Nick, they went above, yes, but then they went back below and made a lower low, arguably. Yep, this is a technically lower low, and this is technically still a lower high. So how about I say it this way? If they don't break out of this prior fail, they're still in danger of finishing the job on the left for the next few months. I wouldn't hold a put for it, but I definitely wouldn't hold calls. And if I do, I would scalp them quickly. SMCI, good company. Is it? That's the point, right? So great P&L. This is a stock I've seen move 40% in one day. Technically speaking, if they're not fraudulent, this is a definite opportunity to make a ton of money on it. So if anybody long, I get it. It's just not for me. It's just too speculative. Technically speaking, 38, 39 should be death. And if you take out 39, you can probably go to 45. Meanwhile, buy the dip into this candle. And hopefully you don't lose this candle. Because if you do, I don't know the downside from that. That's probably on a headline of sorts. Earnings are in 9 days. Be careful. Cooking the books. Yeah, that's the question. Is it or isn't it? Financial company. If I'm going to invest in a bank, that's not it. I don't know anything about it. Technically, anything above 57 is tough. If I'm shorting JP Morgan, I can short this one. Or if I'm shorting JP Morgan, I'm definitely not going long this one. Now, the opportunity is that, yes, okay, it can go to 65. That's what they do. They fall, they consolidate. Like, they could be here. And if so, then the upside. I don't want you to get out of it because of me. But it's not for me. Like, they could be here. Like this. Who knows, right? So it's not an easy long from here. Buy the dip, yes. Nice trend. STZ, holy crap. They were selling rallies and then they just puked it all out. I don't know what they said. Maybe it's worth looking into it. Constellation Brands. Anybody know what the heck? Look at this target from back here. Look to the penny. Holy crap. This target from December of 2022, they avoided it for 2 years. And then now they went to it to the penny. Look at this. Boink. Holy moly. Wow. What the fudge? Oh my God. This stock is nuts. Alrighty then. This was a buy the dip moment. What is the deal with it? I'm going to add it so we can discuss it in the live room. I want to learn more about it. Given the severity of the drop when markets are so bullish, I wouldn't go long without room for error. Because the reaction off of this drop is going to be violent. Like there's going to be violent resistance. Like 200, 198, 196, 208. Every one of these nodes is a resistance zone. So I would be very, very cautious. I'm just going to say resistance zone. That's to say it mildly. Wow, that is a pretty violent. So start doing homework and see if we can debate it in the live tomorrow. Symbiotic. So robotics, I love. This one has some accounting irregularities, so that's a caveat. Other than that, it's a good buy the dip moment. P&L is awesome. 10 days earnings. I know the company will probably address it. They have to. Don't you think somebody would ask them? Solid support below 24. Next time it falls, you should look into it. I'll put an alert. You can probably sell puts now to own it. But if you waited this long, maybe buying a cheap call to participate for the earnings instead of selling puts would be equally as smart. Anything below 14 looks like a gift. I don't know what happened here in June of 2022. Suddenly, maybe NVIDIA this, NVIDIA that. Maybe it's a buyout target. Truist Financials. Yeah, everything I said about that other financial company, SLS, applies here. Or SFTBY, whatever company it was. Short above 48.50. And if you take out the high, you probably get to 51.50. So if I'm looking to short it, I can short it from here to here at least, and then this, or let them pop and then short it for this. So I can either short here or here, above 50. If they go above 50, I would sell a call or a call spread to buy a put, or I can be holding a credit call spread from now, add puts when I see them start to turn down. I don't know anything about it. This is purely chart conversation, purely trading conversation. I know nothing about it. This is a pretty ugly P&L. Look at JP Morgan. That's a bank, right? Look at this beautiful P&L. What the hell is this? I don't know the company, so please don't change your investing based on my words. Do your homework. I'm just raising caution. Target. What's going on with Target? It cannot stop being a political football. What the hell? Again, popping up in my feed as DEI this and DEI that. Are we done with this stuff? That like it being a talking point with this company. It's old, but now it's coming back to life. This is the range I'm trading with Target. Management has proven somewhat strong in performance before. I don't know of late, but 10 years ago when Walmart and Walmart were forefronts taking, Amazon's got something, let's start to look like Amazon. 143, you take that out, you get to 152. If you lose the lower end of the blue box, you're going to retest the low. I don't think it should. 133 or lower should be solid support. So if it falls on rhetoric, you might want to consider a long position. This reaction was too big. Remember, we went long on this or considered or talked about it. The report wasn't as bad as the reaction was. It was just impression. TLT, so I said I statistically the trade is still viable, but I would be out for a scratch, a little green. So this yellow path is still there, but this week is a coin flip. And if I wanted to stay long, I suggested and I sent it out that I would close the position. For me, I would have closed it and walked away. But if somebody wanted to play that yellow path, they can close it and move it out 1 month. So it'll be a little bit slower. February is too short. It's only 2.5 weeks, so I don't want that. The words from Powell will impact this directly. If he talks rates lower, this one will rally. If he talks rates higher, this one will fall. Like if somebody said, would you consider raising rates this year if inflation comes back up? And he says, well, everything is on the table. This will crash. This will be testing the support at 85. And God help us if we lose 85. I don't think it should happen because that would be nuts. But if he says something like this, this one falls. So it's like an earnings report for the TLT. Transmedics. Okay, I don't know what they do other than the obvious. Solid P&L. I mean, nothing outrageous. A month until the next earnings. For some reason, Wall Street hates it. This came to fruition. I said they would dip and pop, but they didn't dip. They just popped. And that didn't happen. That's the only thing that didn't happen. Instead, they took the lower path. So, and I had this green line. What did that say? Nothing. So the resistance at the green line kicked in and failed it. So the green line, I got there from this. Battle zone, proved. So they just confirmed the breakdown with a lower low. So here's the risk. If they don't get back to 72 or higher, they're at risk of going to 48. What? That's what I'm reading. That's it. I mean, I don't know anything about it. The chart says they're selling rallies, just copy paste. Here's a rally. Here's what happened. Couple of rallies. So here's a rally. Look, big rally, smaller rally, lower low. Big rally, smaller rally, lower low. So TOST. TOST is TOST. No, it isn't. That's a decent P&L. Who is this? TOST Inc. What do they do? I remember the ticker. I just don't remember the company. Okay. Wow. This is perfect. Like you couldn't craft a more perfect line. 41.52. Let me tell you if it is 0.52. .51. It was 1 penny off. this tick right there and that tick right there. 0.54, 1 and 3 cents, 1 and 2 cents. So that's a line to watch right there. Look at this. Point. And this is a line to watch. So 41.55 might get you a burst to 45 with a lot of resistance above. You have to pay attention to this guy as well. So we will copy, make this one bigger and red, and then we will copy it, copy paste, and move it up higher. That's a selling zone. Bunch of support below. So I think I could argue for a retest of the support level. And on the downside, it may want to go to 33 at some point to take out this large candle, but it's not necessary. In fact, we can put a large candle here. That's that large candle. Let's label it. When is that? November earnings. November 24 earnings. And I'll put it right top. So now we know. TPR, I'm short and I'm down. I was green briefly and I'm down. So I may end up having to do what I did with GE with this one, which is sell a call or a call spread instead. Holding the put is most fruitful, but then it rallied. So it was a starter position. I have not added. I don't have confidence. And because ANF did the same thing, it finally came down to reality. This P&L does not inspire this. And if the globe is going into a recession, maybe not, this one is very vulnerable. Either that or the mega rich are going to continue to spend. We'll see. This is Tapestry, the old coach. So I have not added the same concept. I think it's overpriced. Let's look if we can put numbers versus just opinion. The PE is 21, higher than all periods of time except for Q3 of 2021, which was the height of the pandemic rally. Price to sales is 2.6, highest ever on this spreadsheet. Growth, let's see if it's justified. Like, I would pay extra for a good growing company. There's no growth. It's shrinking. So net income growth, shrinking. Let's see here. Margins are great. You see, this is margin. Like the other two we looked at, margins were down to here. Like there's no meat on the bone. Here, they have excellent gross margins, which means they make crap and they charge us extra for it. Stop buying their stuff. They're robbing you. Look how much it cost them to do it. They hand it over. By the time you pick up the bag, all of this is profit in their pocket, which means the quality is questionable compared to anything else you can buy. That's my logic working here. It's just a status symbol. And then operational profits are also pretty good. Like this looks like Apple and Microsoft. I mean, that's a good P&L right there. Debt, almost 9. Let's see if it's a problem. Probably not. No, it isn't. They have a good debt position. So it comes down to valuation, and I hate it up here. The stock price has outpaced the financial situation of the stock, so vulnerable for dips. TRMD. Falling into support. Let me zoom out. Oof. This thing should have held 21. The fact that it's below 21 worrisome. You can argue for 15 or 14 or 13. You wouldn't play that, but you can argue for it. P&L is pretty good. I don't know what's going on here. Be careful. Let me see here. Somebody had a specific question about it, so hold on. Let me go see. No, that's not it. Okay. If you lose this support level at 18, you're probably going to lose 14 too, which is pretty weird. All right, the opportunity is for you to take 23 out. You do that, you can get to 28, 29. If it goes to 28, 29, I would exit if I was a trader. If I was an investor, I would sell aggressive cover calls. Tesla, I know what they do. What do they do? I've heard of them. It's a no touch for me, folks. Earnings are in 3 days. My thought is we're rallying based on misconstrued messages. We'll see what he says in the earnings report. As a car company, this stock needs to be half its value currently, but it's not guaranteed that it's a car company. They can create another source of income like this, but they haven't. And the last time he officially spoke about that, he said we're a year and a half off. Maybe 9 months to a year and a half, maybe 1.8 years. So unless he changes that deadline and if he hints to a new source of income, they're going to announce a new car, which should be a big seller, to kill everybody's entry point. Like anybody would want to buy a Tesla over anything else. Like if I'm buying a Corolla and I'm paying 40 grand, or I'm buying a Tesla and I'm paying 38 to 41 grand, guess which one I'm buying? Not the Corolla, even though I don't like Teslas and I wouldn't own one. But if faced with that financial decision, I would buy the electric one because it's cool, it's new, and I would enjoy it, right? So we don't know what he's going to say. In 3 days, I think this will be interesting. Buy the dip, yes. Short it into earnings at your own risk. Come to me the day of the earnings. We'll look at the options and see if they give us any solid hints. If there are no earnings coming up, I would say this one is going to lose 400 handedly and go to maybe 391 to 387. Test these. Now, if you lose these, 372, we're going to test the low end of the threes. Now, that's sacrilege, I know, but it could happen. Just like 475 is possible. Trust me. So come to me on day of the earnings. I'll tell you the size of the straddle. I tell you where the options are. So then we have math to make an educated guess. If I own shares, I would comfortably sell covered calls, and you can make thousands doing that. Taiwan Semi, it's one of those beautiful P&Ls. If you don't believe me, I'll show you. That's how a company, if you're going to throw a class on how to structure a business, this is how you do it. Look at the cost of goods sold, and they make some pretty expensive stuff. And look at the operational expenses. That means everybody at that company works their ass off, and they all contribute to put the product on the front line. That's how companies work. Like on paper, this company is fake. It's so good. That's how it is. The product gets to the table, and everybody's contributed. That's the only way you can explain this. That is unbelievable operational expenses. They must work their people to death. Well, not physically, but anyway, a pristine company. Don't short it for no reason. Buy the dip, yes. Own it for the long term, yes. If the market falls, this one falls. So if you tell me, what do I do with the stock? This stock is very bearish, and it's probably going to end up at 156 at some point in the next 2 years. So sell the put out in time at that level. Add to it some calls or call spreads on dips, and then you'll be golden. Or just wait for the crash and load up. Put it on the list of core companies to own on the market crash. Like in 2008, we had the financial crisis. The market crashed down to 66 or 666. That's one of the ones you load up on. Just put it on your to-do list. You know, one of the nibbles you take. TWLO, not one of the nibbles you take. What the fudge? All the shorted. I've never said these words on TWLO. I would be out. So this is one of my favorite companies, okay? This spike, I forget the number. I'm going to say a number. I'm going to go verify. That spike, and it's still $300, $310 lower than its all-time highs. After this spike is because they're doing buybacks. I think they re-announced another buyback. Regardless of the reason, this is the stock. This is one of those stocks that I don't trade anymore because there's these so not to insult anybody, unrealistic traders, unexperienced traders doing this, and this looks like an all-time high. It's not even close. So what do? You go along here? How about it? I tell you what, whoever asked about this, I did not read the comment with it. If you're going long, do it, and let's talk in 6 months. Let's see where it's at. Or 2 years. I like Twilio. Buy the dip. Up here, no. Oh, by the way, one thing I don't like, the metrics have changed. So it's shortable for a reason. So the reason I used to like Twilio, I'll show you mathematically why I like Twilio. Look at the growth rate. Okay, so I'm going to go to an annual look on the sales. 78, 87, 66, 44, 63, 75, 55. That's 2020. 61, 35. Now we're starting in that was the first 30% growth year over year. Single digit growth last year. Single digit. You go from going 80% to 8. 10 times lower growth rate. So it's not the same company. Quarterly, still single digits. Now we go up close to double digits. I'll give them credit. This was 10%. So have they turned? Is the next one going to be 15, 20%? That's the big question. If not, that's a short. Valuation is too much. So don't short it based on that. Just follow that logic. 4 times sales by no means is this high. That's very low. That's like lower than Apple. So it's not expensive, but it's changing makeup. So make sure you know it. Okay, that's Twilio. Enough. Texas Instruments. I want to say buy the dip, but if you lose 183, you're probably going to 170, which is where I have a buy the dip alert. 176 is good, solid support. So if somebody sold a put or a put spread somewhere below 175 and for the next 2 months, I'm okay with that. In fact, I should put it on my to-do list. It's doable. Go back and read the report. I forgot what it was like. I thought I read it. I can guarantee you it's probably boring as usual, which is good, forecastable. But now that looks like a huge head and shoulders. And the target down might be $20 or more. So they could retest the lows from April of last year. Just keep that on the radar. TXNM, energy, another nuclear. This chart is shortable down to 44 and maybe 42.5. If not from here, from 52. So you can short it from here to here, target 1, target 2, whoops. Target 2 and I'll be out, or wait for a pop and short it from here. T1. T2, I'll put a question mark, not as easy. Or alternative short. Alt short. Either way, I wouldn't start longs here. 26 days until earnings. United Airlines. I am short and finally making money. We'll see how this plays out. I have to tell you, this reaction, this action on Friday with United Airlines was pretty phenomenal. But, I need to see them go above 110 to believe that they have a lot in them. So the Iron Butterfly for the earnings was perfect. It closed to the penny on the 105 level that we put it on. So if somebody took that, they made $700, but that was not the goal. But what I'm saying is that the options forecasted it correctly. So I'm going to look at the options again for this week to see how to manage my risk. If they take out 109, they're probably going to push for 113 and 114 for another high. For me, this candle is, let's see you take out this candle, Mr. American Airlines. That is earnings. This one right there. All right. Uber. Somebody said, is Uber a good investment for the long term? Yes, it seems so. The guy has good kudos on Wall Street. I'm having less respect for him now than before. Technically speaking is what I don't like. It's a good company to buy the dip on. I bought it outright when it came to the market. I think it was 52. You can see where that's the separation. Let's go to a monthly. So when I bought it, it was somewhere around 52. Right here. But I couldn't have. Then I must have bought it for 44. That's what it was, 44. Whenever it came to market, I bought it. It wasn't 45, which was the high. I think I bought it for 42. Okay, so never mind. But 50 plus or minus. Look, this is a monthly candle. So here's 1, 2, 3, 4, 5, 6 months, 7 months. them fighting over 54 plus or minus. So this candle is a big, half this candle is super important, which makes this super important. So easy number to remember, 50. The closer to 50 as a starting point, the better. Accumulate for the long term, sure. On dips, don't accumulate too fast. You have support at 60, backup support at 55. If you lose 55, you probably lose 50, but that would be a buy the dip moment. Starter positions from now, you can sell puts to own shares, but earnings are in 10 days. I don't know what they're going to say. We'll see. I like it. Buy dips, yes. VRT, buy dips, yes. Vertiv, wow. It's a lot of, what do they do? Manufacture, infrastructure, power. Okay, so they're probably rallying on that $500 billion investment. I got to tell you, I don't believe that headline, but we shall see. Buy the dip. That's what they're doing. They spike and they dip, buy the dip. Where? Below 130. Below 120 if you can. If the market corrects, this one will probably give you an attempt to get it in the low 100s. So if that's the case and you like to buy shares here instead of buying shares here, listen to those words. I would consider sell a put to buy it wherever I want to buy those shares, even if I have to go way out in time. Faye, are you in here? If you're not, if I didn't answer your question for some reason, where's that ticker you asked me about? I thought you asked me about a ticker and I had notes. I have a solution for you. Just remind me in the live room. VTRS. Yes, so hang out at the end. We'll discuss it. TMDX. Where did it go? Why is it not on the list? Did you ask in the comments but not give me a ticker? Don't give me tickers in the comments. I don't look at the comments before. I look at the comments to answer in the live. Okay. VTRS, solid support zone with a backup support zone. If I didn't get out of my longs, that's not where I would get out. I would imagine they're going to bounce back to 12, maybe even 12.5. Decide whether you're trading or investing and make decisions accordingly. This is a decent starting point for an investor. Just leave room to add. WBD, Warner Brothers, I also thought was going to be a good buy to dip moment down here. So if somebody did it, whoa, I missed it. Next time it falls below 9, consider going long for a bounce. I don't know much about their P&L. It doesn't look that attractive to me. It's a spin-off from AT&T, I believe, right? Up here, I don't know who did this. I mean, who bought there? If any of you bought there, please come to me before you buy next time, because that would have been not an obvious point of entry. That would be an NOPE, not an obvious point of entry. NOPE. Look left. I don't think they can break out of 1250 without a real good reason. I think it's easier to drift towards 850 than 1250 at this point. So as an investor, there's nothing to do. You can sell puts to own shares. I wouldn't add to my position or anything like that. If I bought them here, I'm not adding here. Wisdom tree. Okay, so I know smart people that want to go along this one. 1050 looks difficult. 11 looks like death. I'd challenge it to go above 11. They're buying dips and setting highs, except this low was a little bit lower than that. We said that about the market, and they were able to come back up here, but this one has not yet. Oh, earnings in 5 days. All bets are off. They can do whatever they want on. What the fudge is this? What in the blazes is that? Are you kidding me with this? What? Okay. I guess you can sell a put against that. Yeah. Target 1 is 11. XLC, I believe 2 companies are half this ticker. Anyway, it's heavy loaded with 1 ticker or 2. Make sure you know what you're trading. I don't trade these. XLC, XLK, SMH, and XLE. I very hesitantly trade that, although it's a little bit slower, so I would consider. So, for example, the XLE 2 companies are a huge portion of the whole ETF. So it's not really an ETF. In this case, Meta and Google are 50%. No, wait, 40%, roughly speaking, almost 40%. 2 stocks. That's a lot. So you're basically trading two stocks. For me, I would rather be in the QQQ, a little bit less sensitive to single stock, and earnings are coming. So breakout, yes. 102 doable. You take out 103, the moon, 105 is doable easily. Buy the dips into those scary moments. They averted reaching 94. So do they have a date with 94 or they put it behind? XLI, I would short outright here. The industrials rallied hard on that $500 billion investment. They should, the money has to land in the infrastructure. Caterpillar is in here. If you wanted to short Caterpillar, that's an indirect way to short it. Cautiously shorting this one would make sense to me. I think it's easier to dip to 136 than it is to go to 148. If you take out that 144, you may get to 148. So I could be convinced to buy a put out in time and add to it later one time and then exit. Credit call spread could work as well. XLK, same comment as XLC. Make sure you know what beast you're fighting. Let's see here if I can get you one. XLK, Apple and Nvidia and Microsoft are 40%, 3 companies. So what happens to the earnings happens here, and this looks bullish, and the target looks 254. Don't short it for no reason. Short it with a stop, but that would be a bet on a reaction negative, because the upside potential is 260 or higher. Basically, this much upside is what they're working on, if they can confirm the breakout. And it's binary because big companies are reporting. So that's the upside potential. If you're long, fair enough, or buy the dip. Anything below 230 is support. Support zone below here. I'll do it like this, and I'll change the words. Support zone. And it's a little bit lower, but it extends furthermore. Every one of these is a support zone. And then there's another backup one down here. It's not going to be scientific. And a backup one below that. You get the point, right? Bunch of buyers, only one seller. Which one's going to win? Doesn't take much. You blow on it, it goes. XLV is a short here. They're selling rallies, and I have to caution you that this is a headline one as well, Kennedy related. If he gets affirmed, this one will drop again. These guys, the bad thing about these guys is while the markets were actually breaking record after record, these guys had a full-blown correction from the highs. The election, they reacted positively like everybody else in November. Let's see if I can point it out to you. We'll talk about it. November 6th, yay! Wait, what? Kennedy? No! Boom. So from the election reaction, they dropped 10%. And now they're going back into the neckline. You can see it. You can see it on my screen. Shoulder, back to 145, bounce, back to 145, bounce, back to 145, lost it, try to recover it, lost it, and now we're going into it. 145 through 150 should be death. There is a chance that they could stall here and test the support. Let's see if they can hold out to support. Okay. I know there are a lot of lines, but right here, I think it's easier to drift lower than break out. Even if you want to hold this, pop up to here. Support zone. Look how long it takes to change the words on TradingView. It still says the same thing. Wow. Okay. Anytime you want. There we go. What? You saw how long it took? Okay. I didn't change anything on my computer, and I still have a gigabyte of speed and plenty of RAM. This is not me. It's them. All right. This letter R is still there. Exxon. All in. I'm all in. Load up. No. Boring company. Solid support and backup support. So if I own the shares, I own the shares. If I'm looking to own the shares, I wouldn't own the shares. What's the point of owning these shares? Tell me. Check out this circle. Look, that is from 2023 November. Watch. Look how many times it's playing a role. It's exactly where they just failed. So just pay attention to the zone. It's going sideways, has a lot of support and a lot of resistance above. You're saying, oh, it pays a dividend. Well, the government pays you more dividend. I bet you the dividend you get from the government for shorter yields on bonds, which are risk-free, are more than this dividend. So it's not an obvious entry point for me. It's a good company. This is the stupid company right here. This is Square, folks. They changed their name to XYZ. What in the world? Okay. That makes me that makes me not want to own this company. When this kind of situation happens, it just makes me question. This is XYZ. Sellers at 94 or higher, opportunity above 100 to get to 110, 115. That's the upside. On the downside, you could get to 75 and not change a thing. You have buyers below, sellers above. Make your mind. 25 days until earnings. I think it's easier to come down to 84 or lower than it is to rally through this resistance at 93. Look at it, 93. Okay, so those are my thoughts here. And with that, we come to the end. But I do have a follow-up question. Somebody had a specific question about TMDX. So I did make notes. So the scenario is they bought shares at 79, I think. They got assigned. And clearly now they're losing money and they want to sell covered calls. So I don't know why you're long. If it's a long-term investment, you can sell a call for July. Sorry. I looked it up earlier. TMDX. So you're welcome. If I'm an investor for this and I'm buried at 78 and I'm okay holding it as long as I break even somewhere around here, I would sell an aggressive call. It's not very liquid. Out to July at 85, and I can collect about $8, maybe more. So that the worst case scenario, it goes to 100, and I have to sell it at 85, and I break even at 103. That's just one idea. You can sell covered calls shorter in time, but then you have to manage it. Let me know if that makes sense, Faye. If not, we can follow up on it. Thank you for being here. I appreciate the kind words. All right, folks at home, come join us. We had almost 70 people here today.